What is financial literacy? Financial literacy is defined as the ability of knowing how to manage your money. It's the knowledge on how money works. There are five main components of financial literacy. Number one, earning. This is money earned from working at your job, business, or any other investment. If your earned income is from a paid job, you need to have an understanding of your tax bracket. I have heard of people who decline promotions or pay increases because they are afraid that this will push them to a higher tax bracket. Some also decline working overtime because they believe most of the money will go to tax. You will only be required to pay additional tax for the earnings that are in the higher tax bracket, not your entire earnings when you file your annual tax return. Number two, saving and investing. The basics of savings require you to have a bank account, and that can be a checking account and savings account. Make sure you understand the conditions so that you are not paying monthly fees that can be avoided by meeting certain conditions, such as directly depositing your paycheck from your employer. Make sure you pay yourself first at least 10% of your earnings before any spending. Invest the 10% in areas where your money can grow so that it earns passive income for you. If you invest 10% consistently, you can achieve financial independence early in your life. Number three, spending. Always know the difference between needs and wants and do not prioritize wants over needs. Don't go on an expensive vacation while your rent or utilities are in arrears. Learn how to budget to help you spend within your means. There are various apps available to help you with budgeting. Your expenses reflect a lot on who you are and what you care about. If your expenses major on frivolous spending that ends up affecting your finances negatively, you may need to make changes. A list of your monthly expenses will help paint a clear picture on where your money is going and areas that need improvement. Number four, borrowing. People often borrow money to obtain assets. Getting a mortgage in order to own a home is a prime example. Some people borrow money to start businesses. Before you borrow, make sure you are able to pay back, otherwise, you'll get yourself into financial problems. Ensure you have a good credit score so that when you are able to borrow money, you can borrow it cheaply. Borrowing money at a high interest rate can make it very hard to pay the money back, especially if you get an emergency. Using borrowed money wisely can help you build wealth. Number five, protecting. Ensure you have life insurance to protect you and your dependents. Have health insurance to help you access healthcare if you fall ill. Protect yourself against identity theft and other scams. Make sure you invest well so that you do not have to struggle financially during retirement. I hope you found this video helpful. Please remember to like, share, and subscribe.